Ob1 Satoshi, checking in.
Alright guys, what's up? So today's topic is going to be a concept that I'm going to call opportunity loss versus capital loss. Are they the same? Are they equal? So in this episode of Crypto Wisdom, guys, that's going to be our main topic, as well as a small discussion about the recent events in Bitcoin.
All right, guys. So let's get right to it. I'm sure everybody's aware, or should be aware, if you're watching the crypto markets, the Bitcoin market in particular, about that massive 40% crazy candle that happened in less than a 24-hour period. Big old fake out, short squeeze, manipulation, all kind of reasons and justifications that are possible, but we don't know exactly what's the issue yet. So before that, when I was looking at it, I was looking for the price to go lower than where it was. It was at 7,400. I was thinking it was going to still drop to about 5,500, maybe 6,000. That would have been logical for me. Why? Because when it was sitting around 75, 74, it didn't seem like people were in a rush to buy it at that price. Meaning that it didn't look so attractive that everybody jumped on it and made it a V-shaped recovery from when it had dropped. So that being said, I was expecting it to go lower, and I wasn't buying in at 74, and I basically missed that big old candle to the upside. So what I want to do now is basically talk about my plan in terms of possibly getting in now, when the time is right, but relatively soon. Because when you have a pump that large, many times, not all the time, but many times, that's not going to be the only leg up. It's going to be followed through by another leg or two up. All right. So it's possible that if we find support at the current price around 9,400, and we start to show a positive consolidation and uptrend, that we may be going higher and testing the 14,000 top, 16,000, maybe even 20,000 eventually. So I don't want to miss out on that, even though I got left behind from that pump on 74. But briefly, let me illustrate to you a concept that I want to discuss today, and that concept is something called opportunity loss versus capital loss. Okay, many people equate opportunity loss as being equal to capital loss. And I want to illustrate the difference between the two, because understanding this difference is going to help you make proper decisions and help you survive and profit within this crypto market. So basically what happens is, let's say this pump that we just saw, let's say like me, you weren't able to catch it in time, you weren't sure about it, you didn't get in, and boom, it left you in the dust. 40% increase, you didn't get no part of that. Okay, now what you have to do is you have to consider that you did miss an opportunity. It was sitting at 7,400. It looked like it was going to go lower. However, you had to consider that it was already at a discount from its highs of about 45%, which is quite a bit. So that was a relatively safe entry, at least for, if not for going, just buying a lot, but at least for starting to ease in, or dollar cost average. But nevertheless, maybe we overlooked it, mistimed it, or it just happened as it is that we missed out on that. So should we FOMO in now at 9,400? Reminding myself first and foremost not to ever do that. Why? Why is that? Because the market is going to give, okay, and the market is going to take. You want to be a participant in the market when at those times where things are lining up for you. Your confidence in the move, your confidence in the trade is extremely high. The sentiment in the market is extremely high. The technicals are lining up nicely. Those are the times when we want to put money at risk, our capital at risk. We don't want to put our capital at risk just because it's possible that we might make a percentage gain when things haven't lined up exactly yet. When we have extreme confidence in the move, and we have a confluence of indicators and sentiment and everything lining up, those are the best times to get into a trade. For me, when it was sitting at 7,400, it was, nice that it had dipped 45%, but honestly, I did anticipate that it's going to go down even lower than that. So I didn't get in. So did I lose? Did I lose out? Okay, well, here's the thing. There's going to be plenty of opportunities that are going to come up where things do line up, where the sentiment, the technicals, the chart, everything lines up. And those are going to be a better time for me to get in. Now, did I lose, basically? That's the question. Did I lose? Okay, here's the thing, guys. Opportunity loss does not equal capital loss. Okay, because opportunities come and opportunities go. And the market, is never going to run out of opportunities. If Bitcoin goes away tomorrow, it's going to be something else. All right, if the altcoins go away tomorrow, it's going to be something else. If it's not Bitcoin, it's going to be gold. If it's not gold, it's going to be silver. If it's not that, it's going to be a business opportunity. There's always going to be some sort of opportunity, so long as you keep your eyes open and your ear to the street. So opportunities come and go. But your hard-earned capital, your capital account, once that's gone, you're out of the game. You're done. Okay? And just to illustrate that point, let me give you some math right quick. Basically, let's say we take a trade and we have a 25% loss on that trade of our overall capital. We lose 25% of our capital. Now, mind you, this candle just shot up 40%. It's going to consolidate now. Many times, instead of continuing up, what it does is it goes boom, straight back down. And you get on the chart what's called a Bart head, like a little Bart pattern. So when you buy after these explosive moves like this, there's a possibility it's going to continue up, but there's a high possibility that it's going to jump down quickly. And many times when it jumps down quickly like that, it's too fast for you to be able to execute your mental stop loss. And even if you had a stop loss set on the exchange, many times it may just bypass your stop loss because the move happened too quick. Everything got wiped off the books before your order even got triggered, before your sell order even got triggered. So let's say that, so what I'm saying is a 25% move to the downside is not unheard of at all, especially in this crazy, ridiculous crypto market. So let's say we take a 25% loss on our overall capital. To regain, to just break even, we have to make an overall, on our total account, we have to make a 35% or a 34% increase. Guys, 34% increases aren't coming every day. It's not easy. You see it every day on the charts, right? But to actually catch it and get in and it's not happening all the time. 35% is a lot. That's a lot. That's a big increase. People are putting their money into these mutual funds and stuff like this to get 4 or 5% a year. In a year, 35% in one trade is nice. Okay, so it's not necessarily easy to come by that, but nevertheless, if you take a 25% loss, you have to make a 35% increase on your account just to break even. If you take a 35% loss, if you lose 35%, which also isn't unheard of, you have to make a 55% increase on your overall capital to break even. That means that you have to make 55% increase in the trade for you to break even and to just go back to square one where you were. Now imagine if you lost 50% of your capital. If you lost 50% of your capital, now you're gonna have to make 100%, okay? A 2x just to break even. Think about it. When was the last time you did 100% increase in one trade or in a few trades or in any amount of period of time? Not that it can't happen, it does. It does happen by the grace of God, okay? But it's not easy to come by. So that 50% loss, now you need 100% increase for you just to break even. All right? Now, if you lose 75% of your capital, you need to make 4 times your money just to break even. All right? 400%. Just so you can end up where you were. So instead of going through that trouble and all that craziness, all right, what we have to do is we have to understand we're not going to catch every move, all right? And we have to understand it's going to be very difficult to buy the exact bottom and to sell the exact top. If we're going to be trading regularly, what we're looking for is when there's confidence and there's a trend in the market that we catch the meat and potatoes of the move. We missed some at the bottom possibly, and we missed some at the top, but we caught a nice move in the middle. And that could be a 10%, 5%, 15, 25, 35, 45, 55% move. All right, but as long as we catch that move in the middle, that's what's important. And we're gonna play the long game, all right? If we can just make 10% increase every month, in 10 months you would have doubled your money. If we can make 20% increase every month, in 5 months you're gonna double your money. If you start to be consistent with that over 2 to 3 years, whatever capital you're working with right now, you're gonna double that money and more. You're gonna, increase that money in a relatively short amount of time. But if you lose that capital, you're out of the game. You're out of the game, okay? So you have to trade extremely cautiously. You have to trade cautiously. Many times these whales, people who manipulate this market, they pump it up like that because all they're looking for is liquidity to come in so that they can dump on everybody's head. That's all right? This happens, trust me, okay? So you have to get in, but you have to get in properly at the right time. So currently right now, I'm waiting for a pullback to about 8,600. If it hits 8,600, then I'm going to get in at 8,600. I feel like that's a safer entry. But if I see that it's consolidating right now at this range of 94, up here making this currently is making a kind of a pennant, symmetrical triangle. If I see it feels like it's going to break out and it's looking stronger and the volume is looking good, then I may just get in at 94 or somewhere around there under 10,000 if I see continued consolidation that looks positive. All right, so you can do that. You can try to trade this market, guys, or you can just dollar cost average. That'll be if you don't know what that is, that'll be a topic for a different video. So I hope that helped you guys out. All right, opportunity loss does not equate to capital loss. That's today's topic in terms of crypto wisdom. A few other things I wanted to just point out right quick before I go. So when I first got into this crypto market, guys, I had a little bit of money. All right, I would consider a little bit of money. It's different for everybody, okay? And I was extremely risky with that money because why? At the time we were in the type of market we were in, it was a massive bull run, and I felt like it was worth it for me to risk that capital to be able to make an increase of 10, 20, 30x, 3,000% basically within 1 year. Things like that were happening around me left and right, and I wanted a piece of that pie. Okay, now I did do relatively well, and once I took my profits, that capital was mine. That increase, that profit was mine. Okay, I took that profit, and once I had that profit, I could have bought assets with that profit. Okay, but I risked it back into the crypto market, and when I lost some of that profit, I'm not the type to look at it like this and say, well, it was free money, as they say, because it was money that I had made already from trading, so I didn't really lose because it's still, my capital is still more than I started with. Yes, that may be true, but the thing is that that was my money, regardless of how I got it. That was money that I had in my pocket that I could have spent on assets, I could have spent on real estate, I could have spent on businesses, I could have spent on so many things. So I can't just chalk it up to, well, I gained that money through trading, so now that I've lost it, it was free money. That's not how I look at it. I look at it like that's money that I had taken, I had it in my pocket, and then I lost some of it through trading. Now when I lost some of it through trades, what I realized is that my appetite for risk, my risk tolerance, as they say, and this is also a topic we're going to expound on more in the future, my risk tolerance was not as high as I thought it was initially. My appetite for risk was not as high as I thought it was, okay? Whereas I thought it wasn't, because I was overly optimistic, and didn't anticipate to lose. And when the loss comes, then you realize, okay, that what? Maybe I should have been safer. And even though I thought I could risk all this capital, that it wasn't going to bother me, it wasn't a big deal, I didn't really understand the gravity of that until I took that loss. Then when you take that loss, then you start to understand that your risk tolerance wasn't as high as you assumed that it was. And what's going to happen here is that you're going to start to explore a new concept we're going to expound also on in the future, called risk management. and money management, and basically how to go about this trading in a fashion where it's going to be very difficult to knock you out of the market. It's going to be very difficult to kill you off completely. That you're going to live to fight another day consistently. That's the idea, guys. You want to stay in the game. You want to stay in the game. All right. So that's basically what I got for you guys today in this episode of Crypto Wisdom. And as things change in the market, then I'll be dropping more videos, guys. All right. So what I want you guys to do is not to smash the like button and the subscribe button, guys, or not to pound the like button. All right. What I want you to do is just take your finger, all right, and just gently finesse that thumbs up button, that like button. All right. Just ever so gently finesse that like button, and while you're at it, you might as well just tickle that subscribe button a little bit as well, guys. If you do so, then I'm gonna try my best to continuously, regularly drop content for you guys that hopefully will help you out in your trading, in your investing, and your overall market strategy. All right, guys, take care. Ob1 Satoshi out. Peace.